Okay, everyone, so we did A and we did B. I want to apologize. I feel like I spoke very fast in the last video, but that video was 9 minutes and we can't spend 9 minutes on each item because that's way too long. So I'm sorry about that. If I spoke too quickly in the videos, please ask me questions. I'll be happy to answer you. And just a quick reminder, since a lot of these are calculations, that there are more ways than one to calculate an answer. So if your calculation is different from mine, it does not mean it's wrong. As long as you get the final answer, most of the time you should be okay. Well, okay, we're gonna move on to C, which is the carrying value at the end of the period for vehicles. Now, this is very easy because we just calculated our depreciation. And to calculate the carrying value at the end, here we are. I use this formula, the carrying value at the beginning. And we obviously need to add our additions. And we're going to subtract our depreciation. So our carrying value at the beginning was 35,000. Our additions were 422,550, and we just calculated our depreciation here. Don't worry, if you got that calculation wrong, I think they would give you a method mark. 1 second, I just need to pull out my calculator because I think I may have made a mistake somewhere. Let me see. 35,000 additions and let's check the memo. So here, I think I added that wrong right here. Let's do it again. 34,999 plus 42255. Yep. So this answer, I'm sorry guys, should have been 254, like that. And then this is 254. There we go. That looks better. Okay, and this should give you your carrying value at the end, which should be 380,000. Oh, wait, let me double check, since I had one amount wrong. And minus 77254, 380,296. Boom. Okay, and that's 4 marks. So already just from these 3 calculations, we have 12 marks. Okay, wow. So that's a lot. Okay, we're now going to calculate the carrying value of equipment sold on the 31st of December 2016. Guys, it's so important to look at dates. If you are bad at looking at a date and remembering it, draw a timeline. Very important in accounting. In fact, maybe you should always draw a timeline to help you remember your dates and to help you in your calculations. So carrying value of equipment sold. So when you see the word sold, we are calculating the disposal amount. So let's see. We're calculating equipment, and we know that the cost at the beginning was for 60,000. We sold something, we don't know how much, and that's what we're calculating, and we have a depreciation amount. We know that depreciation was 10% per annum on the diminishing balance method. Okay, so let's see. So we want to calculate on the diminishing balance method. Yes, so that means that our cost for the next year would be 108,000, right? How did I get that? It's this amount. That's our new cost. Our new depreciation is 10% on this, okay? Why? Because we're now doing the diminishing balance method, which means we update our cost with the depreciation every year, and then depreciation is on that amount. You should know this by now. So this depreciation will obviously be 10,800. 10% times this. Our new carrying value, or our new book value, would be this, subtract this, and it should give you 97,200. Okay, now here, remember that this is not the end of another year, okay? This is the 31st of December 2016. So our cost is still easy, that's 97,200. But don't forget that when we calculate depreciation, we are not calculating for an entire year. We are in fact only calculating for 10 months, okay? March to December is 10 months. So we're going to say 97,200 times 10% times 10 over 12. And that should give you 8,100, I think. Okay. So don't forget how we got this. We need to remember that, hey, this is 2016 for December. It's not the new year end. Okay, very good. And now we said we're calculating all the depreciation for, oh no, we're calculating the disposal. So now that we have all the depreciation amounts, this is how I'm going to calculate our disposal. We know that at the start, we had a cost of 120,000, right? And we know that, oh, one second, sorry guys. Okay, and we know that eventually we want to, let me see.